Hi, my name is Samuel James Price, known as the Crypto Lifer, and every single day I do a news segment on my live stream, and I break down what's happening inside of Web3, crypto, fintech, and more. And I just want to give you this fast update so you can see what's happening in the news. UK Treasury's crypto asset proposals are a step in the right direction, BingX Global CEO. So they're finally happy that someone somewhere is trading regulation. And once that gets done in the UK, I hope the US looks down on them like, what are we doing? How come we didn't figure this out? And they did. Make us look like clowns when we're the head of everything and we run the world. It's kind of sad, right? So, decentralized derivative exchange DerivaO launches mainnet on zkSync ERA. Yo, zkSync continues to get big names attached. It's really moving decentralization. DerivaO is committed to the creation of trustless and efficient on-chain derivative infrastructure. Our goal is to foster innovation and self-custody, self-sovereignty, and economic liberty. Think about a time where there's going to be no centralized exchanges. It's all going to be DEXs. And we're never going to have to worry about rug pulls because we're all going to have access to our own money on our own wallets. This is what we want. They don't want this. They want you on a bank. They want you signed up. They don't want you having your own wallet. But that's the safest thing for all of us. So how come the biggest powers that be don't want what's safest for us? That's the question you should be asking yourself. U.S. jobs, October jobs up 150K, missing forecasts for 180K. Bitcoin remains lower at 34.3. Interest rates have lately fallen sharply across the U.S. yield curve as traders place bets that the Fed is finished tightening monetary policy. And that's good, as interest rates will start to drop a little bit, and they're not going to raise rates. I don't see them raising rates. Are they going to cut rates is the question. The U.S. bond market quickly turned tail over the past 2 weeks, moving from panic selling action to the idea that the Federal Reserve rate hikes are over this cycle, making the coast clear to begin adding fixed income to portfolios. After pushing through 5% in October, the 10-year Treasury yield had tumbled back to 4.6% prior to the employment news. The 2-year Treasury yield has a similar amount, yielding 4.9%. So when more people think that the market's going to tank, they head into safe assets and they pump the yield. When they get out, they lower the yield, right? And the yield curve is when the 2-year pays you more than the 10-year. That's when we get an inverted yield curve. If you ever hear that all the time, it's when the 2-year pays you more. What is a yield? What is a yield? It's when you buy government debt, they pay you to buy it, right? You get an interest rate on that. You buy T-bills, Treasury bills, all right? That's the idea behind this. And that's the news for you, everyone. But thank you so much for watching the news. I go live every single day, Monday through Friday, 10 a.m. to 12 p.m., and Saturday and Sunday nights at 8 p.m. I can't wait to see you on my next live stream. God bless you, and may you have a wonderful day.